Virgin Galactic full analysis. I haven't done a full analysis, deep dive on the stock for, I don't think, 6 months up to a year. It's now time once again. We're going to address COVID. We have to look at COVID now because how that affected the stock and where we are today. A lot of stocks are being reassessed now to the time since COVID because now things are going back to normal. Also, what Jerome Powell said today at his testimonial presentation. I've got a video coming out about that, where we know rates are going, how it compares to the rest of the market, what the effects were after the split, and where we go from here, and also a look at the financials. We've always said that we can get through to Delta with money, but now we've got some new figures to share with you, which might indicate that is no longer the case. So let's have a look. Who's buying? Who's selling? The money, the debt. Will we get to COVID? Will it go bankrupt? What should you do? Should you sell and take out what's left? Because anyone selling now, of course, is selling at all-time lows. Everyone is losing money who sells now. No one's selling today for a profit. That wouldn't be possible, right? Unless you're shorting the stock, of course, and betting on it going down. We'll also look at the short position. So in this review, we're also going to do a deep dive and look at the the comparison, and this is very important, the S&P, and see when it went up, when it went down, how it compares to a COVID play like DocuSign, which we've just recovered, and Zoom, and other things like that. We'll look at the latest news around the stock. Morgan Stanley are saying it's underweighted, how it's now featuring on Wall Street Bets, where that leaves the stock, and the numbers itself as we look into a deep dive at Virgin Galactic. We haven't done this for a while, but we are about to do it now. So buckle up for the latest full analysis on the stock. Remember, I don't own the stock at all. I often get asked about this. It's not on my portfolio at all. I only own the S&P. I interview CEOs. That's why I'm impartial. Everything I say is honest and real. My wife still does own some on her portfolio, but it's got nothing to do with me. And she's keeping it for the long term, whether it goes up, zero, down, bankrupt, whatever. It doesn't influence me. I don't care about it. It's not important. What's here, what I'm doing here is what it's all about. So without further ado, tap the like button and let's get straight into it. There's quite a bit to cover, so it'll take a while. So I hope you're comfortable. Got a cup of tea? Let's get straight into it. So Virgin Galactic, we've just had a couple of days ago, Virgin Galactic is maintained at underweight by Morgan Stanley just a couple of days ago. This report came out. Virgin Galactic price target raised to $35 a share from $175 by Morgan Stanley. However, it was on the back of some news. At the same time, Virgin Galactic surges 7.5%. Is this an indication of future gains? A few days ago, and why I'm mentioning that, because since we had that little pop, it collapsed. Well, that was more to do with the Fed and rates and other things. We got a little bounce there, but that's all gone again today. We are going to get rate cuts. Like I've said, for 18 months, the summer of 2024, we'll get rate cuts, and we will. I've stood by it the longest time. I'm not going to give up on it. Still believe we're going to get it, and it's the summer until the middle of September. So I've got a couple of months to go. Otherwise, I'll be wrong. Let's see. I'm not 100% certain of that, and that's why I'm all in with margin as well. I believe that, and we can all see how the markets have grown and how my portfolio has grown. But this was a few days ago on the basis of all of this, good news coming, and all the markets are surging. Everything's up. Whereas Virgin Galactic simply popped and then gave up again. Anyway, let's go into it, and then I'll go into some really scary numbers for you. Virgin Galactic shares ended the last session up 7.5%, which is great at 952. The jump came in an impressive volume with higher than average number of shares changing hands in the session. This compares to stock's 51% loss over the past 4 weeks. Now, as I read this to you, I'm going to share with you there has been institutions, they were all buying, but they've they've dumped it since then. If we go down here, we can actually see, you can see there the selling going on and how things have been moving. We have seen some hedge funds recently buy in, but it's such small amounts. It hasn't really done a great deal. And if we look at insiders, a lot of people are going, this is great. Insiders are buying. There must be something going on. This is fantastic. However, when we look a little bit more into it, and it's important to do that, otherwise you miss the whole point. These are simply compensation shares, accumulation of shares via grants or awards. It's not insiders buying, loading the boat, thinking this is great. It's a way to manipulate the stock. They have been basically giving away the shares as payment rather than payment with cash, if you like, getting rewarded, compensated in shares. That is all that is. So it looks great, and we see this little surge, and everyone gets excited, going, great, it's all doing well. But in reality, all we've got is compensation anyway. Let's dig deeper and then look at the numbers. The latest uptick in the share price of space can be attributed to the fact that the company recently won a contract from the International Institute, we know all about that, to fly 3 research astronauts. That was good news, but that wasn't why the stock popped. It wasn't enough. The contract wasn't enough. It wasn't worth enough for the stock to pop up. It was on the other news of the rates being cut and all the rest of it out of the FOMC report. Anyway, this marks the second research mission that IIAS has conducted with Virgin Galactic. The company is expected to post quarterly loss of $5.07 per share in its upcoming report, which of course we will cover live. We've never missed a flight. We've never missed an earnings, and of course we'll cover it live. The links are below and above my head. Don't miss that event. That could be the last earnings, as I'm going to come on to in a minute, which represents a year-over-year change of plus 44%. That's good, right? Revenues are expected to be $3.5 million, up 87% from the year ago quarter. While earnings and revenue growth expectations are important in evaluating the potential strength in a stock, empirical research shows a strong correlation between trends in earnings, estimate revisions, and near-term stock price movements. For Virgin Galactic, the consensus EPS estimate for the quarter has remained unchanged for the last 30 days. And the stock price usually doesn't keep moving higher in the absence of any trend in earnings estimate revisions. So make sure to keep an eye on space going forward to see if the recent jump can turn into more strength down the road. Well, now we know it didn't. It collapsed after that. It was a little bit of buy the rumor, sell the news. People jumped in, got out. No one has any faith. No one's owning the stock. They're simply trading the stock. And now it's made itself onto Reddit because of FFIE and GameStop. It's now been dragged into the whole meme craze. And now the stock has got more damage, which is exactly what Eric Kearney wanted from his time working at GameStop. He'd often tell me YouTubers can influence stocks. I'm sure that's what he wanted me to do, but I decline. I'm not interested in playing silly buggers with stocks. I'm interested in owning businesses, building things, not messing around with silly buggers on YouTube dressed up like idiots. Anyway, Virgin Galactic belongs to the Zacks Aerospace defense industry. Another stock from the same industry, Redwire Corporation, closed the last session. I think we move on from there. That's not important. Okay, let's now go to the numbers. Now, if you like honesty, if you like a straightforward review of a stock, tap the like button. If you prefer something just made up that benefits me, I suggest you go and watch The Wolf of Dubai. He'll tell you can have a training program, give him $10,000 and make money. We provide free scalp trading by somebody who's learned how to do it professionally, paid to do it, and we provide it for free. So you can have our training for free with someone who's actually qualified to do it. We are a very different type of channel. Let's look down now at the numbers. So first of all, this is one thing that drags a lot of people in. They look at the intrinsic value. This is what fueled Fisker. You may remember Fisker popped crazily until it went bust. It shows a valuation of $583 a share. That's right. You heard me right. $583 intrinsic value. People will look at that and go, oh my God, this is the best stock in the world. I'm going to own it. I should buy it. Okay, based on the intrinsic value, yes, you should, because now it's $7. Fill your boots. However, when you read into it more closely, it doesn't use DCF valuation. Now, this is important because these metrics aren't provided. They're not available. The company isn't reporting certain things. We can't evaluate properly. It's losing money. It's not making any money. We can't evaluate it properly, but it can be evaluated without it, and it draws the attention to the stock and makes people think, this is great. I'm going to buy it. I can't lose. I'll keep buying it. That would be a mistake, in my opinion. Let's scroll down. Now, this is where it gets interesting. These figures have changed recently. March, 8.4 million. In revenue. Now, this is what you decide. This is when it comes down to it. Are you buying it, hoping that you can trade it? Or are you buying a business that you can hold for 10 years because it's about to explode? Now, what we've got here, you don't see very often, is a projected huge S-curve, an NVIDIA moment, a Tesla moment, a Bitcoin moment. Are we going to get that for Virgin Galactic? Now, if we are, if you believe we are, flipping heck, you should be loading the boat at this point. However, 8.4 million in March. Estimate June 30th, we'll be getting the earnings soon, 7.3, a decline. And then a further decline, 24, further decline, spending money, burning through cash, no money coming in, hardly any coming in, 3.2 million, 2.2 million, going down and down. Now, if we can survive this and get to this, 26, 32 million, 64 million, 92 million, 122 million, very, very nice. S-curve. Do you believe we are going to get to that? If you do, hold on to your seats, buy as much as you can, own the business, everything's great. However, I'm going to show you some numbers in a minute which might scare you. Operating income up 9%. Operating income is steadily rising, steadily, no S-curve there. Net income up 11%, expected to rise very quickly in 24. We have estimates, but it's flatlined going through 24, 25. What about financing cash flow? Down 5%. Not really a major deal there. Investing cash flow up 118%. Investing cash flow up 118%. We're spending money. That's a negative. Operating cash flow up 5%. No projections. All right, now then, this is where it gets a little bit of a gamble. It's all or nothing on this stock now. You're either going to be rich or bankrupt. And that sounds silly, but it doesn't really. There's no medium term for this. It's all or nothing. You buy the stock, it makes you rich. Simple as that. Or you buy the stock, you buy your ticket, you makes your choice, you lose all your money. Now, what's the chances of making your money? And what's the chances of you losing your money? Well, if we look at the assets, 1.1 billion in assets. 1.1 billion in assets. Now that includes a rocket and all the rest of it. The bell has just gone. We're making this during a live show. Just wanted to ring the bell for you. We're making this during a live show. I've been asked to do a full analysis for Virgin Galactic, so I'm doing it now. 1.1 billion assets. 765 million is in cash. Because remember, rockets and stuff like that aren't really assets anymore if the business goes bust. Who wants a rocket that's out of date? Now, why do I say out of date? I'm doing extensive research at the moment for a private company that exists like Virgin Galactic with the wings, the whole thing, the feather wings, the whole thing that can do what Virgin Galactic does without a mothership. Virgin Galactic have lost the edge, the surprise of time. The competition is caught up. It's not public yet. It's not a big deal yet. No one's buying it. No one's talking about it, but it exists. and I'm doing a lot of research into it at the moment, hopefully to get some videos out soon. But there is competition now. As we always said, people aren't going to sit around and watch Virgin Galactic take all the money. At the end of the day, the romance of the company is gone. You know, the last few Virgin businesses died. No one's interested anymore. All kinds of issues. The romance, Richard Branson, the white of shine, the guy with the silver hair, riding in, saving the day. Those days are gone. Doesn't exist anymore, right? Different world. Competition's coming from everywhere. Rate cuts coming, interest rates coming out, lots of new businesses coming onto the horizon, great new opportunities. Virgin Galactic have lost that. It took too long, spending too much money on their private parties, messing and buggering around as they did, and all the rest of it. Anyway, 1.1 billion, 765 million in cash. Okay. Now, bearing in mind, this was a couple of months ago. There's going to be less now. Not earned any money since then. There'll be less. But that's what we have right now, okay? That's what the earnings reports are for. Look at the liabilities. They're increasing to 660. All right? Long-term debt. So we're not just running costs now. We're not just paying to do stuff. We're in debt. We've got debt of 418 million. It's nearly, I mean, if we look at it, 63% of their liabilities. So we're not just paying to run the show and, you know, whatever. We've got long-term debt. Now, debt doesn't do anything. Debt just costs you money. It's not we're spending money building the rocket, which of course we're doing, or spending money on innovation and discovery and whatever. We've got debt. Debt is a noose around your neck. It costs you money. You've already spent the money. It's not doing anything for you other than costing you money. Now, we're going to get rate cuts in September, but only 0.25%. We might not get another rate cut the rest of the year. Rates are going to stay high for longer. They are going to come down, but a meaningful difference is maybe 2-3 years away. And that is what Virgin Galactic need now. So their debts aren't going to go away anytime soon. We have got 1 billion in assets. We've got 765 million in cash. Maybe got less than that. But we've got 418. Nearly all the cash nearly is debt. Already spent. Already gone. Looking at that, to me, any delay, any issue, any technical issue, any competition to rear its head and say, we can provide the same service for less, or whatever. Anything that takes away the attention from Virgin Galactic, bearing in mind their marketing is awful, it's all over. If we look at the gross margins, well, obviously the company's been losing money. No one's in surprise of that. 767%. Operating margin, negative 5,710, has improved. Since they stopped flying, the right thing to do, because they want to get more efficient, they want Delta, and so on and so forth. Not spending as much money, not running the business the same way. We're just doing things and we're just getting ready for Delta. We're not putting on flights all the time. Net margin. See, people said, why can't you carry on flying? That's the reason why. You know, this is the reason why. We're spending less money now, right? Net margin, minus 5,301. FCF margin, that's negative 5,718. ROCE, return of capital employed, negative 55%, starting to trail down again, not go up. ROIC, up slightly, return of invested capital. So they're making money on the cash they've invested. Well, that's going to go down soon because rates are going to come down. So this is going to start falling again. What about return on assets? That is negative of 42%. It's going pretty flatline. Return on equity, negative 113% and falling, not even holding. Now then, this is where we've got to look at cash flow, burn rates, increasing, They're now spending, they've saved money on operating costs, but they're spending money on the development now of Delta. You can see the cash flow, how it's been impacted over time. Look at this. Profitability score, 24%. No problem with that because they're doing what they're doing, and they're not flying every day. They're not bringing in buckets of money. It makes sense. They're not profitable like that. That's fair enough. We can live with a low profit. That's okay. We can live with that. But now what worries me is we've got a solvency score of 40. It's getting lower. The solvency score and the chance of going bankrupt is increasing. If this falls to 30, 25, the writing's on the wall, and we're heading in that direction. However, some upside. This is the point. If you believe it can get through to Delta with no issues, not running out of money, even though it is, if you believe it can do that, well, it can more than double its money here, 115% worst case scenario. What about the average? 483%. Well, that would be very nice, wouldn't it? A 4x, 5x nearly. Or what about a 10x? $84. Now, you may remember, I said the stock can go to $100. Now, I don't want to come off disingenuous and claim as a success when I haven't got it. I claim that old money. We're not at old money anymore. Where in fact, at old money, we would be at, I've done the calculation, 35 cents. So I said 35 cents to 100, not where we are today. That's 20 times different. So I'm not trying to convince you and say, hey, I said it would go to 100. People will say, well, you said it would go to 100 when it was 20 times more than it is today. And that is correct. Or 20 times less than where it is today. That is correct. So, of course, that's not on the cards right now. Now, do I still believe it could have gone to 100? Should it be at 100? Absolutely. If they'd flown celebrities, if they've made it trendy and cool, if they'd stayed ahead of the game, if they'd crushed the competition, if they'd secured finance by getting the stock price up so they could dilute, make more money, all of those things, they would be at 100, there would be more money in it, people would have bought it, and it would be great. Look how Nvidia gets the excitement. Look how Tesla gets the excitement. Look how Bitcoin has had the excitement money. Virgin Galactic never attracted any of it apart from the initial flights right at the beginning. Other than that, no one's been bothered, which is a great, great shame. So the point is, you've got two choices now. Using this factual information, you've got to decide, can Virgin Galactic get through to Delta without any more delays, without any issues, still having the customers, still no competition? Then great, we could have $100 stock. However, if you think, like I think, it's going to run out of money before it gets there, if it gets there, there's competition. If it gets there and the customers moves on to something else, any of those things happen, it's going bust. The short interest, no real significant transactions here to shout about. I showed you what you've been looking at, witnessing is simply tax transactions and stock options. However, on my software, which is done properly, we're not focused on that. Whereas online, they're trying to share the narrative that the stock's going up, people are buying. They're not. They're just getting free shares. What about short interest? Short interest is 27.66%. Anything above 20% is excessive with volume, can force a short squeeze. 1, there's not enough volume. 2, where's the good news coming from? There won't be any good news for another year. There's nothing to talk about. The only positive catalyst that we have medium short term is going to come shortly. If I go back over to my app here, is the earnings expected July 30th. Of course, I'm going to cover it. Click above my head down below in the description. You'll find the link. We've been beating on earnings, and earnings has been moving up. If we get a positive earnings, that we are earning more money, they could be taking more deposits, which they're not taking, but maybe they'll surprise us. I don't know. The stock go up, they could dilute, make some money. Stock's going down. How can they do that? Where's the money coming from? If we get a beat, and we've been beating every time, and we've been beating since Q2, then the stock could continue, could suddenly get a bit of a bounce, potentially. However, if we get a significant miss, which is very likely, then the stock is going to go a lot lower. Remember that they reverse split the stock to protect the stock, get it back into SEC compliance above $1. They didn't expect the stock to continue dropping. I said it would. A reverse split is negative. It's weakness of management. They wasn't able to get it above $1. They reverted to a reverse split months before they had to do it. They went to a vote months before they had to do it. Rather than finding a way to promote the business, they decided, sod it, we'll just reverse split it. This hasn't helped. I said it wouldn't. It's not good for the stock, and it's continued to go down, and now we're at all-time lows all over again. And there's no indication that this isn't going to stop. Now, some of you will say, great, this is great. I can buy the stock for nothing. This is what you got to look at. This is what you got to look at. We covered this morning on the show. We were talking about Tesla, and people were saying Tesla's now got expensive when you could have bought it at 110, 112, 117, but you've waited until 250, and now you want to buy it. Why do you want to buy it? Because everyone else is buying it. Well, are you going to buy it when everybody else buys it when it goes down or when it goes up? What are you going to do? Make your own decision. Don't be a lemming. You now know from this review how much cash they have, how much debt they have, the potential of the business. Don't look at the stock price. Can you buy this company now for this valuation of the business? 144 million. Can you buy Virgin Galactic for $144 million and own it? Own it. Be an owner. I own the business, so what money it makes is mine. I own the business. Not the share price, the value of the business. The business today is valued at 144 million. You can buy all the outstanding shares today for 144 million. Less, a lot less, a fraction of the cash on the books. Now, if the cash was earning money and interest, it'd be a good investment, wouldn't it? If they wasn't spending any money whatsoever and all their money was just sat in the bank earning money, it wouldn't be a business, it would just be a bank. It'd be a good deal because you would own all of that money plus the interest it earns. I'll do it. I'll buy the whole thing myself. And I would. I could get together a few people and we could buy the whole business. I know enough people to buy that whole thing. Just buy the whole thing. 144 million, we'll buy the whole thing. Great deal. However, we're not buying a bank, we're buying a business that's spending the cash. The cash isn't going to be around much longer. Another year, that cash is going to be gone. So you're buying 144 million for what? The hope it does well. So now what are you buying? So just because the share price is low and the whole business is just 144 million, that doesn't mean to say you should buy it. Just because it sounds cheap doesn't mean it's worth anything. I would rather buy it for $50, knowing 100% it's going to $100. I can double my money. At this point, it's more likely to go bust than it is to be successful. There's my full analysis on Virgin Galactic. What do you think? Click above my head for all the links. Alpha Spread. Oh, hello. Hang on.
Stephen Lewandowski donated $9.99 through a super chat. Earnings July 23, 2024 MTDR please Martyn.
Okay, as a member, you can book a earnings just like that, and I'll cover it, make a video on it, promote it, and cover the earnings. Thank you very much. I'll write that down in a second, Stephen. So you make the decision now whether it's viable for you. I think it's most likely to go bust. Is it worth risking it? That's your choice. Click above my head for all the links. Alpha Spread, martynlucas.com, the website. Go up there and you will find my link. Scroll down all links page and you'll find the link to Alpha Spread. My members get the plan for free, or my membership gives you a discount, which makes the membership for free. Click below in the description. You'll also find it down there. I'll also put down there and above my head the links for the earnings. For the earnings, we'll cover the earnings live. You don't want to miss that, of course. That is make or break for the stock. And over here, I shall put the playlist, and over here, I'll put the earnings ready to go. So you can come and join me. Leave a comment there already. Queue yourself up. Get yourself a front row ticket. Virgin Galactic, there's my latest full review. I'm not here selling training programs. I'm not here when the stock goes up. I'm here when it goes down. I'm here when it goes up. I'm live 12 hours a day. Everything I do is for free. I'm here to help people. I'm not sponsored by anyone. I'm not on the Motley Fool, which has all kind of backing and sponsorship. I'm here telling you the truth. Take it, leave it, subscribe, don't subscribe. Honestly, I don't care. I only want to do what's right for my viewers, the ones that do want to see what I have to say. Those that want all the bullshit and the lies, plenty of channels that will tell you whatever you want to hear because you'll subscribe to that. I don't care. I just want to tell the truth. Above my head, down here, over here, over here. Until next time, as always, take care of yourselves and each other.